Mortgage rates rose to 7% for the first time since early July this week, erasing their late summer decline into the low 6% range. Rising rates, combined with economic uncertainty and anxiety brought on by the impending presidential election, are causing some prospective homebuyers and sellers to press pause. But the effect is smaller than expected. On the buying side, pending U.S. home sales rose 4.5% year-over-year during the 4 weeks ending October 27, the biggest increase in more than 3 years. On the selling side, new listings of homes for sale rose 3.4%, in line with the increases we've seen over the last several months. But those numbers don't tell the whole story. First, they measure a 4-week period ending just before mortgage rates hit 7%. Some people may see 7% as the threshold beyond which they won't buy or sell. Second, we're comparing to a period in October 2023 when weekly average mortgage rates hit a 2-decade high of 7.79%, dramatically slowing housing market activity. Finally, there are signs that house hunters are backing off at earlier stages of the home buying journey. Mortgage purchase applications are down 8% from a month ago. Many buyers and sellers are sitting on the sidelines until after the election, aligning with a recent survey finding that nearly 1/4 of prospective first-time buyers are holding off until post-election. Even with those caveats, pending home sales and listings are holding up surprisingly well. Rising mortgage rates, combined with stubbornly high home prices, have brought the typical U.S. homebuyer's monthly mortgage payment to $2,593, near its highest level since July, and cut into buyers' purchasing power. Redfin economic research lead Chen Zhao said she would expect a bigger drop-off in home buying and selling activity with the jump in mortgage rates, especially given that the country is a week away from a highly consequential and uncertain presidential election. While it's not unusual for mortgage rates to rise heading into an election as investors' expectations change, mortgage rates surging to 7% after the Fed's interest rate cut is surprising, as is the fact that pending sales have remained resilient, Zhao said. There was a possibility that mortgage rates would rise after the September rate cut, but we didn't expect them to rise this much. There was a window of 6% mortgage rates early this fall, but that window was shorter than expected. It's possible 7% rates will also have a short window. Rates could decline depending on the outcome of the election, if the worries driving bond market investors to demand higher rates dissipate.